Okay, so I'm Beth Bennett with H&R Block. H&R Block does personal tax returns, business tax returns of all types. We do bookkeeping, payroll, audit services. We're open year-round, so you can come and see us at any time of the year. Anytime you got any questions about your tax return, we'll be glad to help you. Any life-changing events that happen, very important to address those as they happen so you don't get a big surprise at the end of the year, like getting married, buying a house, selling a house, kids going to college, taking money out of your 401k. That's always a big shocker for people, the tax bill that comes due the next year. So if any of those things happen in your life, please come see someone, let them give you a tax consultation. We do not charge for consultations, that is free. So come and see us for that. Like I said, we're open year-round. You can come and see us any day. If our hours don't work for you to get your return done now, just call and we'll be glad to accommodate you. Okay, we understand everybody's got life going on around us, and so we try to make our schedule as flexible as possible to accommodate you guys. So the tax reform. Everybody interested in that and how it's going to affect you? Do you know they say that it will virtually affect every single taxpayer in America? There's not anybody that will be unaffected this year, and that's pretty scary. They actually, how I see it, and I could be wrong, it's happened. My peanut gallery thinks that's funny. They really just moved a lot of numbers around, so I'm kind of really scared to see how that's going to affect people, if it'll help or if it'll hurt. You know, you've heard lots in the news about they've doubled the standard deduction, but has anybody heard that they took away your personal exemption?
Yep.
Yeah, that's not huge though, right? They're like kind of keeping that on the down low, and that's a big difference. So for a married family, a married couple with kids, they gain 11,600 on the standard deduction, but they lose over 16,000 in personal exemptions.
That's ridiculous.
So now you got to worry about if the other tax changes will help or hurt. So it's a little scary to me to see how that'll affect people, because nothing's worse than someone to sit at your desk and think they're getting a great big refund and then to owe a little bit of money. That's a tough conversation. And so again, we try to help everyone prepare for all those changes. So you know, the tax brackets have changed. A lot of the people, most of the people fall into the 15 or the 25% bracket. The 15 went to 12, the 25 went to 22, but you got to remember with that too, the withholding tables went down on your paycheck. So if you're a W-2 employee, you're having less taxes withheld. So you got to make sure those are still in sync. You know, I'm sure it took everybody a little while to figure out on your W-2 on where you want to be. Some people like to get a refund. Some people like to break even. Some people are okay with owing a little bit. So you might want to check those numbers as well to make sure that now that the withholdings went down on your paycheck, that you're covered and you won't end up owing at the end of next year. A big plus in the tax credits are the child tax credit, and this one's huge for two big reasons. One, it doubled. So if you have a child under 17, that number went from 1,000 to 2,000, so that's great. And they raised the phase-out income, where it was at 100. If you made $125,000 as a married couple, then you lost that credit. But now it's at $400,000, so that should include a lot more people that didn't get the credit before. So we're pretty excited about that one. And they added a new credit for people whose child turned 17 in that year. You no longer get the child tax credit, but they've added a tax credit for dependents of up to $500 per a dependent in your household. So that could be a child that's still at home, you know, and over 17, a parent, or anyone else in your family that you might, you know, maybe helping take care of, or is going through a rough time and you're helping them out. One of the biggest ones, and I think might affect some people in here, is the employee business expense went away. So anybody that has any business expenses that comes out of your pocket and you're a W-2 employee, as of next year, for this year, doing that return in 19, you no longer get to take that. So that affects a lot of people. Truckers is a huge one because they always have a lot of other expenses. So they can take usually truckers get paid a minimum amount for mileage, but the IRS allows more. They can take that difference. They can take their laundry, their meals, showers, entertainment. A nurse, I talked to a home health care nurse last week, and her company pays her 30 cents a mile. Well, you can take 53.5 cents. So this year she can take that, but next year she'll lose that. And if you travel a lot for your job, think about your salesman. you know, if you're a salesman for a company and you've got a huge territory and you're in your vehicle and your company only pays you that minimum amount, you lose that. If you're in any kind of trade business that requires tools, you could take those tools. That's no longer there. My husband's a lineman. Those tools are very expensive. And those are no longer anything that you can take off. So that's something to plan for if that was a big part of your tax return last year, that's just gone. There's no talk about bringing it back or only gone for so many years. A lot of these credits are gone till 25 and come back in 26 and different stuff like that. But this one is just now off the books and no talk of it returning. And that's huge. That's going to affect a whole lot of people. So be aware, be very aware. Home equity lines of credit. If you got one on December 15th of 2017, you can no longer take that interest. Now, we sent up some questions to clarify some of these, and there's not all very clear answers yet, as it's still kind of fluid. But the way that we read and understand it is if you had a home equity line of credit, like you've had it open for 15 years on your house, but you don't have a balance, and you write a check today and put a balance on there, you can still take the interest on that one. But if you started on December 15th, you can no longer take that interest. So that could, you know, hurt a little too. A big one that I really like and I'm super excited about, and probably affect a lot of people in here, is the new, you've heard about it, they call it the pass-through income, the reduction in taxes for small businesses. So how that one's going to work, it's 20% of your qualified income from your business would not be taxed. So let's just say you had a net profit of $50,000 on your business. 20% of that doesn't go on the tax return. It comes off as a deduction. So that's a nice difference. Just think about that. That's $10,000. If you're in the 25% tax bracket, that's $2,500 in taxes you save. So that's a nice change for the small businesses, and hopefully, like Brian and I, ours Brian, we talked about that yesterday about, you know, most of us as small businesses, we don't just put that extra money in our pocket. We reinvest it into our community and our employees and our businesses, right? So that's big for everyone if we give the small businesses a little extra cash in their pocket. The tuition and fees deduction went away for education, but the other two education credits stayed the same this year. So not going away. You still can take some education credits. They just, maybe the one you were using looks different this year. The healthcare penalty. Who thought the healthcare penalty went away this year? It did not. It did not go away. It goes away in 2019. So if you didn't have health insurance in 17 and you don't have it this year, you will continue to pay that penalty of $695 per person, or up to 2.5% of the household income. So, I'm sorry?
Whichever is greater.
Whichever is greater, yes. So be aware, if you don't have the health care this year, you're still going to pay the penalty. What else we got on there? Taxes are so fun, aren't they? But we do this all day.
And we're glad.
You're glad it's us and
Not us, yes, we're glad.
The postcard, I still get questions if we're gonna have a postcard. There's no postcard. A postcard could only happen, the possibility for a postcard would be a married couple or a single person with just W-2, and that's it. There's no credits, no deductions, no kids, nothing, right? That could happen. Or if they went to a flat tax. But I mean, I think I heard the other day there's like 17,000 pages of tax code, so I'm pretty sure that's not going on a postcard. Yes, Martin? Oh, sorry. The one thing, again, I'd like to make clear, and I think I've said it a couple of times, if you don't normally see a tax professional, and I'm not saying you got to come to H&R Block, but if you don't normally see a tax professional, go see someone this year, because there's a lot of changes, and again, how they move the numbers, you could really stand to lose some money, and you really need to start preparing.